Thank you very much. Good evening, everybody. First of all, I'd like to thank Full Gospel for inviting me to share once again today. I'm always very happy to attend and also to share whenever I'm called upon to do so. I'm very happy to be here today to share my thoughts on real estate investment trusts, real estate investment trends and opportunities. We've seen the first half of the year, and we're going into the second half. So in reality, this is an appropriate time to review what has happened half year and do some prognosis for the rest of the year. But this is a religious gathering. So if you don't mind, I would like to invite you to join me to pray as we start this session. Shall we pray? Thank you, our Lord and our God, for this unique privilege, for this platform that you have given us to share amongst us all. We thank you, Lord, for that which you have in stock for your people tonight. I surrender myself to you, and I receive the grace even to deliver the right messages as you want me to tell your people in the name of Jesus. Blessed be your wonderful name, Lord. I've prayed in Jesus' name. Amen. 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 I believe you are seeing my screen. What I've done basically is to divide the whole presentation or message into two, if you allow me to say it like that. Briefly, I will share some thoughts. There are some interesting thoughts about real estate as an asset class, particularly now that real estate faces significant challenge from other asset classes. So I will share my thoughts with you on that. And then, as I've been asked to do, I'll look at the market overview 2021 to 2022. I'll try and do some detailed analysis of trend on the various categories, because if you want to play in real estate, you have to choose your category. You cannot just jump into the whole industry and begin to play everywhere. So I'll do some detailed analysis of the various categories, the various categories in residential, commercial, hospitality, industrial, and just to look at all the categories extensively. Then I will share about other trends that we need to watch in the industry. Earlier in the year, I had shared some trends for 2022. I've tried to review that just for us to understand the trends. If you want to be a player, whether you are a simple player, whether you are playing retail or you are playing wholesale as a developer, the trends that you need to watch out. I've been asked to look at the opportunities, so that's what we call the opportunity footprint. So I'll look at the opportunity footprint for real estate. I'll look at the drivers. What are the drivers? In other words, when you're taking the decision to invest, what are those factors that you should be looking at? What are those factors? What are the new frontiers in real estate? So you're asking yourself, where's the next Allen Avenue in Lagos? Where's the next Akonwojo Road in Lagos? Where's the next Monastery Road? Where will it be in Lagos? What are the factors that will help you to take that particular decision? We call them the drivers, and then the new frontiers. Then I look at what I call pitching your tent. What are the potential sweet spots? What are those areas that if you have money you want to invest today, without thinking too much, what are the areas that you can put your money and be sure that you're going to get significant return? Now, as a player in this market, obviously real estate is a very challenging market. I always like to advise my colleagues in the industry that if you want to win, there are some imperatives. So I'll close by looking at what I call optimizing the market, the key imperatives. Now, I know that a lot of us, we don't see we look at real estate from afar, but the reality of the matter is that today, real estate is the number one asset class globally. And this particular quotation, which I will leave with you, actually summarizes the significance of real estate as an asset class. I always tell people that real estate is very critical because everything happens on the land. Whether you are in finance industry, whether you are in manufacturing, you still come back to the land, and everything revolves around real estate. I always joke with the guys in digital today, that even when you build your business in the metaverse, you are still coming back to live in a physical house. You're not going to live in the metaverse. You can live notionally you can do your business in the metaverse. You can go to church in the metaverse. You're still coming to live in a physical house. Which underscores the significance of real estate. Last year there was this report by McKinsey which shows that 60% of the net worth of assets globally are held in real estate, and that is very significant. And I'm going to be referring back to that again in the course of this short presentation. Now, I try to define, just to set the scope for this presentation, just to define the scope. And here I'm saying that we're looking at real estate investing, which is the purchase, ownership, management, rental, and or sale of real estate, or an interest in real estate for profit or for return. Now, this is very significant for me because we're talking to those who are driven by return. So if you're not driven by return, really, this message is not for you. There are a lot of us that we just buy real estate because our church members are buying, or they are buying in the cooperative, in the office. We don't think through it. That is not the people I'm addressing. I'm addressing those who consciously take a decision to invest in real estate for return. Because everything is about return in real estate, as far as I'm concerned. It's about ROE, return on equity. But I always mention that there are two other ROEs. There's return on emotion and there's return on ego. When you're talking of real estate investing, you're talking scrupulously about real estate investing for return or for profit. It could be direct and it could be indirect, as we're going to see in the course of this presentation. I'm just going to leave this, just trying to underscore the nexus between real estate and economic development, But there are 2 points which I've highlighted in red here. Number one, real estate is always the enabler for other economic sectors. Offices, spaces for retail, manufacturing, logistics is all about real estate. And it's always the key contributor because, you always, even when you become wealthy, you always have to take the critical decision. What is the kind of portfolio of investment do I want? And over the ages, real estate has always emerged as the most important investment asset class, either for individual, for HNIs, and for institutional investors. Now, huge potentials, real estate, global market, you see there, Nigeria market estimated to close the year at $8.2 billion US. I mean, you can imagine the size of that market, because a lot of the time when we talk about real estate, people talk only about residential real estate. But there's commercial, there's industrial, there's data centers. The biggest real estate companies today in the world, they run data centers. So we need to begin to be a lot more to look at real estate much more broadly, so that we can understand where we really want to play. And in Nigeria, it is driven by population and urbanization, which I'm also going to come back to. Now, there's always a lot of argument about housing deficit. Some people say 20 million, people say 17 is 18 million, So I don't want this presentation to be about that particular argument, But the reality of the matter is that there's huge housing deficits in Nigeria, be it 30 million, be it 40 million, be it 20 million, huge housing deficit. The funding gap of housing is estimated to be something in the region of $363 billion US. So you can imagine the kind of numbers that we are talking about, And for those who argue against housing deficit in Nigeria, there was the African Housing Forum in Nairobi in May. 2 weeks ago, I was speaking to African Real Estate Society, and we tried to look at the deficits across Africa, and they put the figure for Nigeria at 14 to 16 million. So whether it's 10 million, it's 20 million, there's a huge gap. I always like to, for those who say there's no deficit, one simple argument I always put across to them is that if you look at what happens around you, if you look at the story on the left part of this slide, for example, somebody built a simple building, 8 units, 8 flat, the guy built, and collected money from over 100 people. He collected 500 million naira, and it happens every time, So the only explanation for that is that there's acute shortage of housing. Otherwise, why will over 100 people pay for somebody who had just built 8 flats somewhere in Ketu or Surulere, you know? So the evidence, the data in the market, you know, strongly supports the position that there is a huge housing shortage in the country. Now, looking at the market overview, I'd like to underscore the fact that the segments suffered significant downward spiral, you know, from Q2 2019 to Q3 2020 for 6 consecutive quarters. You know, the segment went down and down and down. But Q4 2020, it bounced back, and we've seen, you know, evidence of continuous improvement in the market since then. By Q1 2022, in nominal terms, the segment grew by 10.84%, you know, and, you know, in spite of all the challenges, you know, the sentiment is still that the market is very strong, is very resilient, and I'm going to show you some of the reasons for that in due course. However, I always like to stress that the segment, real estate segment, will thrive off the back of very strong macro fundamentals. You know, so you always have to look at the direction of the economy, disposable income, interest rate, pricing, inflation, and general policy, general issues around insecurity, you know, security. All those issues always affect real estate. You know, so at any point in time that you are taking your decision, you have to continuously try to see the nexus between the area you want to play and what is happening in the economy. For the market, I've put here that there were some confidence-boosting deals. For example, the groundbreaking of U.S. consulate at Eco Atlantic, the deal by Microsoft on the building on Kingsway Road, you know, the $100 million data center development center that Microsoft opened about 3 months ago. All these are factors which are helping to drive some of the positive sentiments in the market. However, costs are running away. Running away costs. I call it. I mean, I didn't want to say rising costs. You know, I deliberately used the language runaway costs because what has happened in the past 1 year, I mean, you've seen some major items. You've seen like 400, 500% increase. For example, just before COVID, price of steel per metric ton was 180,000. You know, today is above 500,000. As a matter of fact, there was a time it crossed 600,000, but now I think it's like 520,000. So you really can't explain that level of increase. So I call it runaway cost. These are some of the factors, and of course, 23 elections is coming, which may dent the optimism of the market. Now let's look at the categories. You know, and like I said, I'm going to be I'm going to look at the category analysis in some depth. So I look at what we call the residential segment. Today, after COVID, it is now being called the living segment. You know, number one, we have to understand that home ownership in Nigeria is about 25% home ownership penetration. That means that there are 75% of Nigerians that potentially are still able to own, still don't have their own homes. You know, that gives an idea of the kind of market, you know. Urbanization over 40%, increase about 4% in the past 4 years. It is estimated by 2050, over 50% of us will be living in urban centers. That puts pressure on the demand for housing. Young population, about 75 million between ages of 16 and 27. They all need to be housed. They have other real estate interests. There has been significant upsurge in diaspora investment, and you can understand, you know, the dollar now changes for almost 650 naira, you know, so if you bring $100,000 to Nigeria today, you can imagine how much naira, what you can do with that, you know, and there are significant opportunities, you know. So I look at the segment. So let's look at the luxury segment. And luxury segment, this is the category I always classify where they sell houses above 250 million. The interesting thing is that this segment is the most resilient segment. Market sentiments favor this segment. The reason is very simple. You know, those who buy in this category, they already have their money. They're either buying a second, a third, or holiday homes. You know, and I give an example here. The building that collapsed in Ikeja, you know, Some of the off-takers went to court, I think 2 weeks ago, and they said the aggregate investment is 15 billion naira off-take investment in that particular building. And these are not all the off-takers. That gives you an idea of the kind of investment that goes into this category. So my take, if you have the breadth to play in this market, deals will continue. Customers will be a lot more discerning in this category. Like I said, patronage will favor tested developers and contractors. Nobody is going to place a bet on any newcomer in that segment in the market. The second segment is premium and classic. This is a very tough segment. I always call this segment the red ocean of the living category. Everybody is playing in this segment. So for you to survive in this segment, you need very strong value proposition, affordable quality, flexible payment plans, delivery reliability, consumer-driven facilities and amenities. For a long time, most of us in the industry, we always assumed for the consumer. But over the past few years, the consumers, they've told us clearly that you don't assume for me. So we used to assume that once you build luxury, you must put swimming pool, you must put lawn tennis court, you must put that. But that's changing the market. So you want to play in that segment, you must understand the values of the customer that you are looking at in that particular segment. In that segment, there's a strong market for shortlets. In fact, it's estimated by Estate Intel that market has grown by over 250% in the past 3 years, and that is very significant. So there are a lot of people who buy and they put on Airbnb and all those kind of arrangements these days. Mid-tier housing for young professionals and families, there are also significant opportunities in that respect. The next category I look at is the comfort homes. This is lower than classic category. The demand here is exceptionally strong. You are talking to first-time home buyers, millennials, young families, and empty nesters. In fact, what I found very interesting recently in the past 2 years, big men. So I'm just completing a project now, and some of my buyers are big people who live in mansions in VI, and they say, I want to downsize. All my children are abroad. Why do I need to live in this big house? So they bought 2-bedroom flat in a serviced environment. That market is also growing. In that category, the customers are looking for good location, space optimization. For the young people playing in that category, they are ready to trade size for proximity. They're not looking for mansions, but they're looking for they're looking for an aspirational lifestyle. They're looking for good location. I always say that these young guys, they want to close from Quilocks at 1 a.m. and they want to get to their houses within 15 minutes. So they're not interested in Aja or Epe or all those far-flung places, but they're not looking for mansions. They're looking for a studio or a 1-bedroom flat with all the basic amenities. Affordable housing, of course, a lot of rhetoric in that segment, but there are some bright spots, like I mentioned here, around Family Homes Fund and Shelter Africa funding for last year. I'd like to go to office category. This office, the outlook is very negative. Now, and I will tell you why. In Lagos, for example, we're told that there are about 1 million square meters of office space in Lagos. 25% of that is grade B, 25% of that is grade A. That's 250,000 square meters. Now, when you have an economy that is contracting, what happens basically is that we are recycling the same tenant. So I go to this tenant, I offer some freebies, they come to your building, because there has been no significant expansion of the market. And now you will see that FAMFA, Mizala Ikeja's building, is about to be ready. That is going to throw additional 55,000 square meters of office space. So let's even say that for our office, she's using 15,000 square meters. We're talking about additional 40,000 square meters for a market that was already reeling under the yoke of oversupply. That is a major issue. So rents are falling by over 40% since 2014, and we're simply recycling tenants. So that market, the outlook, very negative. For retail, the outlook, I say, is mixed. If you look at matured assets, relatively strong occupancies, but there has been overall decline of footfalls, and a whole lot of factors account for that. There are defaults, there are stall development, the kind of tenant mix that we see today. They're not optimal tenant mixes. You just have to populate. People don't understand that if you build and you run a shopping mall, if you have an anchor tenant, there's a minimum threshold of occupancy that you must maintain. There's always an agreement with your anchor tenant that if your occupancy goes below this particular threshold, the man begins to pay you maybe 50% of the rental that you have agreed, even apart from the turnover rental clause. So a lot of the time, you just put tenants there, even free of charge, just to ensure that you maintain that threshold and you are still able to collect money from your anchor tenant. Industrial and logistics, I say this segment is robustly positive. And the reason is simple. You'll see there has been exponential growth of e-commerce and the digital ecosphere generally. And when that happens, you need a strong supply chain architecture to back up the distribution of products. I always tell people that e-commerce doesn't deliver goods. E-commerce only enables the transaction. After enabling the transaction, the supply chain architecture must deliver. So you're still going to have hubs, you're going to have spokes, that would deliver. Superior returns, certainty. I happen to be part of a startup in this category, and I know that all they have in the past 2 years is good problem. They just can't cope with their demand. A whole lot of things are happening. Hospitality, strong recovery projected. We're coming back post-COVID. So there are positive sentiments on the hospitality segment. Healthcare, of course, post-COVID, very strong growth prospects. But to play in that category, you require patient capital. So those are the categories. What are the other trends that we need to pay attention to? I've updated my prognosis in this respect. Number one, we need to watch for regulation and compliance. And the reason is simple. A lot of bad things have happened in the industry. So I see 2022, first half, second half, going into 2023, 2024, a time of regulatory and compliance intensity. You just have to be at the top of your game. This is not the time to sit on the fence. It's not the time to cut corners. Yesterday we still had a building collapse yesterday. So you can imagine, government is just going to go bananas on people. You also know in Lagos, for example, the Lagos State Real Estate Regulatory Authority law was reenacted, and there's significant impetus to enforce the law. So regulatory compliance, we need to watch out the issue of title. After Magodo, I think that all those who have been sitting on judgments, they are now encouraged that after all, this thing is possible. If I have a judgment, this guy is still there, Iwaya is still there. Agidingbi, people don't know that in Agidingbi, there's a judgment of the Supreme Court over the whole of Agidingbi. In 2019, after 42 years, it covers over 2,000 plots. Just imagine how many times properties have changed hands. That judgment of the Supreme Court is still there, So what has happened in the market is that the judgment creditors, they begin to think that, it's possible for me. If it could happen in Magodo, it could happen anywhere, So this is not the time to sit on any negative title that you have. It is time to go all out and make conscious effort to resolve your title issues. Trend toward funding. I always ask the question, where's the money? People always think that real estate is about brick and mortar. No, it's a financing game. Like I always say, you have to be able to match your assets and liabilities optimally over the long term. If you can't do that, you are going to be back in your village very soon, like I always say. So where's the money? This is the time that players, you have to have very significant flexibility in your capital stack. Bold, like I said, innovative financing solutions. Banks may not really be your help. I know there are bankers on this platform. I haven't found banks very helpful in this business, but you have to be able to create creatively, finance. Look for medium to long-term capital. Pricing must be decent. When I hear some players saying they borrow at 40%, I'm just wondering what kind of margin, you have to be selling cocaine somewhere with this our housing business. We need to focus more on tokenized financing. I have floated a REIT before, and today, even this economy is moving towards tokenization. What that does, you're able to scale in the digital ecosystem, and you can raise, a whole lot of money. And by the way, the regulations on crowdfunding was approved last year. Even though it's not as, the maximum amount that you can raise is still 100 million naira, but it's a very good starting point. So funding, I've taken time. And when you get this presentation, you can look at the various innovative financing strategies today. You could do direct project-based investment, you could do crowdfunding, you could do joint ventures, you could do, by the way, in my business, my strategy is joint venture, and we've built incredible land bank, working with people, to ensure that we're able to both deliver in the marketplace. Technology is another trend and like I said, there, massive disruption is here across the entire value chain. Pre-development, development, post-development, facility management. Today, we're working towards deploying appropriate building technologies. Today we still build houses. If we must conquer the housing deficit, we have to start manufacturing houses. I always stress that two things must happen in the housing industry. Number one, we have to commoditize housing. We have to be able to start buying houses the same way pretty much you buy any other commodity. You have to commoditize housing, and you have to industrialize the process of the delivery. That is what technology is going to do. You can see what the young guys are doing in this industry. I also happen to be supporting a startup in this space, and I can see the kind of growth that they are making. So technology, another trend to watch. So let's look at the opportunity, the key drivers. People always tell you that it's location, location, location. But what are the factors embedded in that location? And there are three. Number one is, so when you want to make investments, you're looking at three factors. Number one is centrality. Number two is development. Number three is neighborhood. Centrality, you're looking at how accessible is this area. You're looking at ingress and egress. Typical example, if you look at Lagos Island has its own issues, but it's the most accessible piece of real estate in Lagos. There are about 8 multiple entry and exit points, and I've always preached to the guys in charge, I still spoke to them about 3 months ago that we're sitting on a gold mine, good candidates for urban gentrification and redevelopment. So you're looking at centrality, you're looking at development, existing infrastructure. Part of the reasons why Lekki will remain far ahead of other segments, other markets in Lagos is the fact that if you look at the pipeline of development, if you look at His Excellency the governor was on his channel's interview, he was talking about Epe, or what has happened in Epe. In fact, he said Epe is small London. Infrastructure is there. You look at pipeline, transportation, new schools, hospitals. You have to look at these factors. Then look at the neighborhood. How accessible is that neighborhood? What are the amenities? What are the neighbors? There are some people, when I ran UPDC, I like to give this example, a lot of the time, whenever we took a position somewhere, everybody just comes into that area. And I've also heard the story of 1 or 2 banks that there are some banks, they're watching where this particular branch is going to establish a branch. So you look at your neighbors. These are the factors. So it's not just, to just shout location, location, location. You have to sit down and distill the factors which are embedded in that location. I need to move very quickly now so that we can have time to talk. I look at drivers of real estate investment, but I want to talk about the opportunity footprints, the markets, and then look at where I think you should be playing, and then I will look at the key imperatives for winning. In terms of the market, for me, Lagos is still clear number 1. Abuja, distant number 2. I think it will remain like that for the next few years, for so many reasons. But there are some tier 2 cities, if you have the capacity to look outside Lagos and Abuja, you should be looking at Abakaliki in Ebonyi State, and that's a market that has done. By the way, I always stress that a lot of the time, what we hear about the East is just IPOB and whatever, But if you take time to, I've taken my time to look at some of the markets in the East, and there are incredible developments. There are some cities in the East that you can go. I mean, the last time I went to Enugu, I left Lagos in the morning with the first flight. By 6 p.m., I was back in Lagos, and that shows the ease of movement. And these are the factors that drive commerce. So I'll put my money on Abakali, I'll put my money on Ibadan, because over the past 1.5 years, the governor has made significant reforms in terms of land holding and all those stuffs, and of course, Kaduna State. I pulled this from Virtuous Capitalist, from Virtuous Capitalist, and it's talking about the 20 fastest growing cities worldwide. It will amaze you that there are 4 cities in Nigeria. There's Abuja, Gwagalada, there's Lokoja, there's Nnewi, and of course, I think there's Potiskum. That tells you, that gives you an idea of the kind of tier 2 and tier 3 cities you should be considering in case you want to go on. Now, I call this the potential sweet spot. Where should you be looking at? I've spoken about residential development, huge housing deficit. I've looked at commercial, retail, and offices. I underscored industrial, warehouses, and data centers. I understood, significant opportunity in that space. I mentioned digitized assets. Today, in fact, there are about 3 tokenized assets that is about to be launched into the market. So you have to watch out for them, because if you are an early mover, you're going to gain significant advantage from that. Co-investing and fractional titles. This is becoming a big segment in the market. You don't have to look for the whole 200 million. I do a lot of co-investing. If I see an opportunity, I just talk to my friends. So it's not just about sitting down and drinking beer and eating. You see this opportunity, you come together, you co-invest, you co-share the return, co-ownership, joint ventures, buying of lands and shops. If you're looking for a place to store your money and do some banking, please buy land. And there are 2 things that Nigerians buy without thinking. It's tested. They buy land and they buy shops without thinking. Land, okay, I will need it from the shop. If I don't need it, my daughter or my son or my niece or somebody will need it. So that is a segment you need to make. You need to pay particular attention to. Student hostel accommodation, massive. It goes without saying. Part of the things that ASU is fighting for is around educational funding. And we have just signed a deal with a university, to build over 50,000 bed space accommodation, and we're working towards that in the next few months. Shortlets, I already mentioned shortlets. Shortlets as an estimator have grown by over 250%. So that's an area that you want to look at. Those are direct opportunities. In terms of the indirect, there's significant market for agency, for outsourced sales and marketing. What has happened in this market today, unbelievably, is that network marketing has found its way into real estate. So there's major opportunity. If you want to play in that segment, opportunity. Digitized real estate services, a lot of platforms. There are over 200 platforms now in this country, and the list is growing every day. Consulting. I've mentioned issues around title, issues around judgment and whatever. This is the time that your due diligence must be at the highest level. I always tell people, if you bring a parcel of land to me and it doesn't have any problem, I'm not going to touch it. I can tell you for free, there's no parcel of land that doesn't have one issue or the other. So it's better when I want to buy the land, let me know what the issues are. If it's what I can live with it, or I can resolve it, I will do. If I can't, I will run away. So your due diligence must be exceptional. Of course, project management, contracting, and construction. Finally, I like to just share with particularly the players, what I think are the imperatives for winning. I'm always very optimistic about real estate, in spite of all the challenges. I'm always very optimistic. It's a very interesting play if you get your strategy right. So the first thing I always try about emphasize is your positioning. What is your positioning in the market? You must be driven by a return on capital employed. You're driven by a return on capital. You must always be by return on capital. You're not driven by a return on emotion. Return on emotion is that, okay, my church members, they're also building house at the camp. Let me go and build house at the camp. You're not a real estate investor, or now I want to go to the village to go and build. We all have houses in the village that we spend money to maintain. That's not real estate investing. I'm talking of somebody who takes money, who invests the money and is expecting this return. Your positioning must be clear. In this market, you must have a unique value proposition that the market recognizes. If you don't have because it's a red ocean. There are too many players in the market. There's so much noise. You have to create a distinct position for yourself. Your financing strategy. Real estate is a financing game. At any point in time, your debt to equity ratio. I see people who are significantly overgeared in the market. You can't afford that. You need a robust off-taker strategy. One of the things that I have tried to perfect, I want to start a project in 3 months. 3 months ago, I'm already working on my off-takers. And I tell you, in this market, it is possible to start a project and fully finance your project with off-takers and your small money without borrowing. It has happened. If we can discuss this thing, I can share case studies of what I have done in the past and what I currently do. So your off-taker strategy must also be very clear. Your portfolio strategy, must be very dynamic. You must have an optimal mix of residential, commercial. Number one, you need to specialize. But if you must have that basket, you need to sit down. You can't just, what people just do is that they are very opportunistic. You can't afford that in real estate. You need a clear portfolio strategy. You must master the development process, land banking optimization, pre-development, project execution. You must have the right structure. One of the things I can tell you is that you need to have a model for delivering on your project. One of the things that I have had to really learn, and I commend the case study on London Heathrow Terminal 5 to all of you. If you haven't read it before, fantastic, the best case study on project execution in real estate. You see how you create your project, how you manage your RO, how you manage the entire process. You take a look at it, you'll see what you need to do. Your strategy must be market-led. Your offering must speak to customers' needs. I think we are gone past the days that we sit down in our offices and we assume for the customer. No, you have to be focused on what the customers want. I went on roadshow abroad before COVID, and I was amazed at what the guys in diaspora wanted. I was amazed. But we had to come back with humility. We tried to give them what they wanted, and they invested in the project, and everybody was happy. Focus on the growth areas. I've already mentioned them. Do less of speculative development. And you have to be less speculative. And the simple way to do it is to face your project. I'm always very alarmed when somebody says that I want to do, my project is 1,000 units. And I look at this guy, he has not delivered 50 or 100, So why don't you start by doing 50 first? Why don't you start by doing 100? Why don't you do 4, 5, 6 phases so I can deliver, But if you don't do that, you're going to end up with project indigestion. Networking. In this industry, you need unbeatable network, with regulators, with consultants, with sellers, I can tell you this, you need to win in the market. Integrity. In this market, trust equity. I'll give you an example. I'm just completing a project, which by the grace of God, we're going to commission in another 3 weeks. 80% of my buyers, they don't even know my site. They gave us the money. They trust us to deliver. That trust equity is very critical. There's trust deficit in the market. If you're going to be able to optimize and deliver 2022 and beyond, you have to deliberately go out of your way, and deliver what your customers wanted. And finally, it's a tough country, it's a tough market. You need a winning mentality. Whatever happens, you have to be passionate about what you are doing, be zestful, be result-oriented. Real estate is not for the lily-livered, but it's a segment that if you understand your onions, you position yourself properly, you will deliver and win in the marketplace. Thank you very much.
Thank you very much, everyone. And now we're back to Q&A tonight. Back to Q&A, and I will start from the chat room, sir. So there are a couple of questions that have been dropped, and I would quickly read. So, well, I think this has been addressed, but I'll still read it. What are the kinds of major challenges one can encounter when buying a land, and which one should one run away from? Because such challenges are insurmountable. Then, okay, that's one. Lots of comments, appreciations, comments. Okay. So somebody says, sir, what's going to happen to the property owners in the area when judgment has been given to another owner, e.g. Magodo residents, Agidingbi? Yeah. Then comments, appreciation, I will skip that because it's a lot. But it's just people saying thank you. Then, aside from the fact that it is okay, UPDC, it's a comment. Thank you, Mr. Woshika. What would be your advice to someone starting out in the industry? How can one bypass agents in searching for a JV opportunity? As it seems, they unnecessarily inflate the land values and are most interested in their fee, even before a deal is consummated. So then, can you please share with us how you resolve encumbered title documents? And those are the questions we have, sir. Do you want me to go over them again, sir?
No, I think I've noted. Are you hearing me?
Yes, sir.
Okay, I think I've noted those questions myself. Okay. Let me start with the first question on the challenges in buying land. I think there is a simple formula to your due diligence. Number one, don't be too much in a hurry. A lot of the time, land transaction is not what you just do just like that. You have to be deliberate and intentional. So the first thing I always encourage people to do is to undertake a physical inspection of the land. It's very, very important, because when you undertake a physical inspection, if there is any, you're likely to see things that may put you on inquiry and may compel you to further investigate and take a decision. Now, once you do that, it depends on whether the title is registered title or not registered title. If it's a registered title, the case is very simple. You go to the land registry, and then you run a search on the title and see whether or not there are encumbrances of the title. If there are encumbrances, it doesn't mean that you can't do the transaction. You have to take a decision whether or not it's an encumbrance matter that you can resolve. If you can resolve it, great. If you can't resolve it, I always stress that real estate is about structuring. I've done some very complex transactions. I remember a transaction that I did that a potential JV partner had a facility with a bank, and they wanted to foreclose the facility, and it came to us. At that particular point in time, we also didn't have liquidity, so we went to a bank. We took the facility, paid off this bank, transferred the title to the new bank, and then started the JV and paid off the new lender. So it's a function of just sitting down and structuring your deal to meet your objective. And then once you do your due diligence, you must take steps to perfect your title. There are 3 things you must do to perfect your title. Number 1 is governor's consent. Number 2 is registration. Number 3 is pay your stamp duty. What registration does is that it gives notice to the world that this land has moved from the hands of A to B. If you go to the land registry, there's what we call the proprietorship column. That shows when A was the owner, when A sold, and the land became that of B. So when you get there, it's easy for you to conduct your site. So when you take a particular title document, say it's C or O, you will say number this, registered at this, page this, volume this in the land registry. So when you go to the land registry, it's not a very simple process, but there are professionals who are tasked. Even me, I mean, I don't do that process myself. I have those who do it for me, even though I know exactly what I need to do. So do your physical inspection. Make sure you get to the real title owner. You get to the title owner and make sure that you get your. And when you buy the land, take possession. In the common law that we operate in Nigeria, we say possession is 9/10 of the law. Like possession is 90% of ownership. So don't buy land and just go on a frolic of excess of your own and then come back and think that the land, particularly in a place like Lagos that is developing like wildfire every day. Those areas where there are judgments, I don't want to comment specifically on Magodo. All the issues around Magodo, but for me, the reality of the matter is that if you find yourself embroiled in this type of controversy, you have to take a decision whether you want to fight. You have to look at the facts of the case. You look at your root of title. If your root of title is strong enough and you want to fight, fight. If your root of title is not strong enough, my advice: go and settle. Go and settle with the new owners. But in all this process, I always advise: don't ever be the plaintiff. Always make sure that you are the defendant. Let somebody else go to court. Be the one that you are sitting on the land while you are trying to settle the particular land. How do you bypass agents? The agents are very formidable and they do deliver value in the marketplace. I use agents. They also make your life easy sometimes. But all those figures they mentioned, they're always negotiable. I always tell them when you say premium this, facilitators fees this, I always tell them they're entitled to finder's fee. Let's sit down, let's negotiate your finder's fee. So I want you to be a bit more open and understand that in the real estate value chain, there are professionals who deliver a whole lot of services and they make your life easy. But everything is negotiable. Like we say that in this world, you don't ever get what you decide. You get what you negotiate. That's my principle. Everything is negotiable. And you come around the table and then you negotiate and everybody's happy at the end of the day. And those are the questions for now. Thank you very much.
Thank you so much, sir. Thank you very much, sir. I think there are two more questions here, and then somebody has his hands raised. So you mentioned that RE is real estate is a financing game. Can you dive deeper into some of your financing strategies? And then somebody here says, who can start up, Mr. Deulu, who can start up real estate? Go about tokenization, and do I need an investment manager to advise on the process and registration with SEC? What will be your best advice, sir? And I think we can then take the person who has his hands raised after this. Or sir, do you want to speak? Value Afolabi, you can unmute your microphone, sir, and ask your question so that we take it together.
Hello?
Yes, sir. Good evening, sir. We can hear you.
Okay, sir. Okay, we are very, very happy to have our guest lecturer. It has been a very wonderful, very robust lecture. You have said a lot of things about real estate investments, but one area that I want to be very concerned about, that I'm interested in, is this area of this aspect of the off-plan system of housing delivery, off-plan. Now, I want to know how has off-plan system of housing delivery fare in Nigeria as of today? I want to know, since you are a very big player in this industry, how has it fared in housing delivery in Nigeria as of now? And then number two is how safe, from the point of view of our situation in Nigeria now, how safe is this off-plan system of housing delivery how safe is the whole thing now? Looking at the peculiar situation that we have found ourselves in Nigeria, how safe, from the point of view of the buyers now, how safe is off plan? That's my question.
All right, thank you, sir.
Okay, thank you very much. I'm going to start with the question on financing. You know, I always stress that real estate is a financing game. You know, and I think the question was, what exactly are the critical drivers of that? You know, I think the first thing is that as a player, particularly if you're a developer, you must have a strategy of matching your assets and liabilities optimally and sustainably. You know, that is very, very important. You know, if you can't match your assets and liabilities, you know, sustainably in the marketplace, I always stress that very soon you will leave, you will be back in your village farming. You know, I always joke that very soon you'll be back in your village farming. You know, the reality of the matter is that you have to have a system in place that tells you you need to have that dashboard in place. You know, so you have to look at your debt equity ratio. You know, when before 2015, you know, financing was very straightforward. We used to do 50-50 debt equity ratio. You know, once you raise your 50% equity, no matter how, there were financiers who would finance the remaining 50%. You know, dollar was a bit stable. You could do offshore financing, all in 6-7%. You know, we didn't have the kind of volatility that we've had in the past 4-5 years. But since 2015, that story has changed. You know, so that's the fundamental thing, and that then helps you to dive deep into all other matters in terms of which finance. I mean, a lot of people, they finance long-term capital with short-term money. It cannot work out. You can't be financing a project of 48-month gestation with a 2-month, 3-month, 7% per month interest fund. It just won't work. So if you are going to be able to do this business sustainably, you have to just have your dashboard and ensure that you're always financing, you're always matching your assets and your liability. The question around tokenization, let me tell you, we as a country, as an industry, we don't have a choice. We don't have a choice but to move towards digitizing our assets and tokenize. Let me tell you the biggest advantage. So we floated a REIT in my previous life. We floated a REIT, 36 billion, I think. What a REIT does is that it opens. So let me just explain in summary what we did, because I need to round up. You know, so we floated what you would call an investment REIT, an IREIT, because we already had the assets. So we pulled 5 assets. We created a vehicle, pulled 5 assets together, and put the assets in the REIT. Did the evaluation of the assets. You know, everything came to like 30-something billion naira. And then we decided to sell 50%, for example, to the market. You know, so we created units of those assets. Create units. So you could create 1 million units at 10 naira. And it means that anybody on the street, rather than be looking for money to buy the big assets, you can just buy 100 units times 10 naira. So you are a part owner of those units in the assets proportionately to your holding. And when rents are collected, they share the rent the same way they share dividend. You know, they share we call it distribution in REITs. That is physical REITs. But today, what digitization does is that you can now take that asset and the unit and now place it in the digital ecosystem, and everyone can buy. So you can trade on your tokens the same way you do with cryptos. When we begin to get to that level, then you will see the kind of development that will happen in the market. We cannot continue to wait until you feel fun, you write this, you write that before you raise money. That is the future of financing for this industry. And we don't have a choice. And I happen to know that there are 3 major assets that are coming to this market on this platform. You know, even non-interest banking, even sukuks. Whatever you do, the debt, the funding that you have raised, put it on the digital ecosystem. Allow people to trade off the back. Just put checks and balances in the place. That is where we need to be. The critical question which has been asked is on off-plan. You know, and I like to tell my brother that for me, off-plan is a critical component of real estate financing. I've done it in the past where I had a bigger platform. You know, we've done projects as huge as 7-8 billion naira, you know, and we didn't have to borrow. We've put in our small money, you know, we've gone to the market. The only thing is that you need to have a track record of delivery. The customers must trust you that once they give you their money, they're not going to run away with their money. They're going to do a good job. And I just gave an example of the project that I'm rounding up. It's not a large project, just 48 flats, you know. But for me, as a startup that I am post-retirement, that's a huge development for me, you know. And we basically funded off-takers by almost 60%, you know, and we put our own money, you know. And eventually we didn't have to borrow from the bank. You know, we had a few investors, project investors who brought in real estate nodes over 180 days, took out their money, took a share of the profit, you know. What I'm saying is that today, the market is such that you have to be so, that's why I keep on speaking of flexibility in your capital stack. You have to get to a level, that you are able to create a portfolio of financing options. Now, if this doesn't work, that works. If that doesn't work, this works, and so on and so forth. I mean, I'm about to start a project now, you know, that I need to do a lot of sand filling. Now, I've done a deal with a dredging company, the financing, you know, so if the cost is 100 naira, they've agreed to take 50 naira cash and to take 50 naira in units from the development. That is financing. You know, we've done all the things, you know, so I'm saying that you have to be flexible, you have to be creative, you have to be innovative, because it is a very, very, very tough and challenging. Otherwise, you go and take money at 30, 40%, you know, you just work for the banks. At the end of the day, you pay everybody, you know, and then you go home empty-handed. So off-plan is a veritable platform. You know, you have to develop trust equity. People must know you, they must trust you, and it comes with delivery reliability. You know, delivery reliability. I went on a roadshow, you know, and people basically invested on the back of, oh, this person. Some people just by going to Google, okay, this is this person, this is the person behind the, you know. So that is just the way I like us to just look at it. I need to round up now.
Okay, sir.
And
sir,
yes.
If you would not mind, sir, I mean, for me, this has been a very, very enlightening session. And I can see 2 more questions. I'm watching my time, okay. But if you have the time, sir, if you don't mind, I would like to take it.
I'm here for you.
Oh, thank you so much, sir. All right. Oh, 3 questions, actually. So somebody's asking, Mr. Shola A, he says, we would like an invite to the commissioning of your projects. So, sir, the question actually, I want to talk about financing, which for me is crucial. Taking into consideration that the banks in Nigeria may not be friendly when you are looking at 40% interest rate, is it wise to look at opportunities in foreign climes by investing real estate, which is exclusive of encumbrances on title issues, low interest rates with huge opportunities? Make the profits and use some of these profits to invest in Nigeria, taking into consideration the exchange rates. Then I also have Mr. Taiwo Joda. I would like to ask him to unmute so that you can take both together. And this will be the final questions tonight. Thank you so much, everyone.
Thank you very much. My name is Taiwo Joda. Good evening. Just a quick one. I see you talk about some states that are regarded as fast growing, and then obviously you mentioned Lagos and Abuja as fast second. Then you move to Ibadan. I'm just wondering that what about the cities or states that bordered around Lagos. So, for example, we have Abeokuta, we have Shagamu. I know that there's a planned free trade zone coming up in Shagamu. So why are these not mentioned? Will you think that taking a position in this axis, do you think it's a good business decision or not? Thank you.
Okay, Taiwo. Oh my goodness. All right. Is that the final question?
Yeah, that's final, sir. Those are the final.
Okay.
Okay. How about Forex? Sorry, sir. One more question, sir. So somebody said, yes. How about Forex fluctuation if you have to repatriate? Okay, I think he was responding to Mr. Richard's question. Those are the two questions,
yes.
sir.
Okay. And I'm going to start from that. Number one is that because of the volatility in this market, it is very difficult to deploy offshore financing to fund your project. Otherwise, if it was when we engage relative stability, and I'll give you an example. When we were building Festival Mall, this was 2011, 2012, we did 50-50 equity debt. And then the debt, we did 50-50 local funding, 50% offshore funding, I think just about $25 or $30 million, And I remember I went to my board, I made the presentation. I think at that time, dollar to Naira was like 160, 170. So I did 10 scenarios, 180, 200, 220. I did up to 350. And I said that the only time it will not make sense to take this money is if it gets to $1 to 400. And I said it will never happen. Remember, this was 2011, 2012. And I said it will never happen. So I got board approval, went ahead, completed them all, took the $25, $30 million, and then 2015 came. We all know what happened in 2015. And I remember December 2015, I was in the UK, and early in the morning, I saw that Naira to dollar had crossed 500 Naira. Remember, there was a time, I think November, December 2015, that it went above 500. Then it came back again, I had to cut short my trip, came back, and then started camping around. Eventually we took a Naira facility and we repaid. Now, those who didn't take that decision quickly, and I tell you up to today, the retail segment has not recovered from that shock. All those who took the facility. So it is difficult to, I would take foreign investment if it is equity, but if it is debt, and that was why you notice that Shatta Afrique, for a long time, they couldn't finance anybody in Nigeria because nobody was willing to take the dollar facility. And that was why they had to raise a Naira bond. They had to do a 250 billion Naira bond last year. And I think they've already brought in like 46, 50 billion Naira. Now they're able to play in the market. So that is the difficulty with foreign. But of course, when we speak of diversification, you can also diversify your real estate portfolio. You can diversify your real estate portfolio. You can always invest abroad if you have the money. In fact, there's a strong case for you to invest abroad. If you invest in the UK, for example, any appreciation you get is real appreciation. But the reality of the matter is that you can never get the kind of upswing that you get in this part of the world, because for obvious reasons, you can't get the kind of upswing that you get. But the little the marginal appreciation you get, is real appreciation. The currency doesn't fluctuate anyhow, and then you are sure that. So if you have that, and then you can bring the money to Nigeria. I have advised some people abroad, to come invest, and I think they are better for it because in spite of the devaluation, because even me, there's something I don't understand about the Nigerian real estate market. It is so deeply resilient. Input costs go up. People adjust their prices. People are still buying. And when people are still buying, you just adjust your prices in the same line, and then everybody is happy. Taiwo, my brother, was trying to put me on the spot. Of course, there are many strong secondary cities. But for me as a professional, when I speak in this type of forum, I'm looking at the cities who have been very deliberate about reforms, who have been very, very deliberate. Oh, Shagamu, Mowe, they will all benefit of the back of what is happening in Lagos, you know. But what I've explained to you about Abakaliki, you have a government that has really gone out to invest massively in infrastructure, massive infrastructure. And you know, real estate follows infrastructure development. You know, that's why when we took a holistic look, we opted for shows Abakaliki and Kaduna. Massive legal reform, foreclosure law. When all the states are still dancing around, foreclosure law was established. They established Kaduna State Foreclosure Authority, you know, and they are moving, you know. So as a speaker, when you speak about this thing, you're looking at medium to long term in terms of what will be the benefit, or even or Ibadan, you know, the kind of reform that the governor has done in terms of whenever they're still struggling with how to use CFO, the processes, you know, they've just streamlined everything that I feel like going back to Ibadan to go and do a project. I mean, I did a project in Ibadan maybe like 8-10 years ago, you know, and I'm looking for that opportunity to go back, to go and do it. You know, so that's the way. I mean, there are so many cities that you can talk about. You can talk about Benin, you can talk about Akure, you know. But for those who have been deliberate about land reform that will enhance the market in the medium to long term, that is what we talk about when we make those suggestions. You know, but it doesn't mean that these other cities also they're not doing great things. You know. Just before we close, I'm also a pastor for Foursquare Gospel Church. Pastor Foursquare Gospel Church, Unikon. You know, my wife and I pastor the church, the new church that we're pioneering. You know, and when we speak like this, we also don't want to leave without giving the opportunity to people who have been blessed by what they've had, and who have never taken that critical decision at any point in their life, and they want to take that opportunity, you know, to answer altar call. And then we also pray generally with everybody. You know, Bible says Paul may plant, Apollo may water. It is the Lord that will give the increase. You know, we come here, we've said our own, you know, but it's God that will give the increase. So if there's anybody on this platform, I think my people at Full Gospel, they are taking notes. If there's anybody who wants to answer the altar call, we'll just give you 1 or 2 seconds to make up your mind, and then we'll pray with you. I will pray and round up, and I will bid you farewell to your respective destinations.
So, sir, I've dropped the link also in the chat room. So if you would like to give your life to Christ, you can fill that form, and the speaker will pray with you, and we will reach out to you after the meeting.
Okay. All right. Let me just pray so that we'll close. Once again, I thank Full Gospel for this opportunity to share with you. I always enjoy attending every Monday and also benefiting, you know. Heavenly Father, we thank you once again. We're deeply, deeply appreciative for this unique opportunity that you are giving us through this platform to hear your word and to be blessed of you and by you. All the glory will return unto you in the name of Jesus. Lord, I commit your people into your hand. You have brought them today. They've heard your word. I pray, Father, by your mercy, that you will grant them, Lord, Father, even the grace and the enablement, Lord, even to do that which you want them to do in the name of Jesus. Amen. Your name alone shall be glorified forever. Amen. Blessed be your wonderful name, Lord. In Jesus' name we have prayed. Amen. Amen.